welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is a special edition where our focus is on the Q2 earnings. The company on our radar in this special is Blue Star. And in fact, the stock has really rallied 9% post the earnings. In fact, it has also hit record high levels on stellar set of numbers that have been reported by the company. On the profitability front, there's a substantial 66% on a year-on-year basis. The company has posted net profit of 71 odd crore rupees for Q2. You also have the revenues that have jumped about 20% to 1890 odd crore rupees. The operational profits or the EBITDA is up by 43% to 123 odd crores, and the margins have expanded from 5.4% to 6.5% as well. Joining us to share more details on the earnings, the key factors on the back of which stellar numbers have come in, is with me the top management of the firm. Mr. Veer S. Advani joins in. He's the Vice Chairman and Managing Director at Blue Star. Good afternoon, sir, and thank you so much for taking the time out for this discussion on business today. Good set of numbers despite a lean quarter. Tell us the key factors that have helped you report stellar numbers this time around, sir.
Good afternoon. Thank you so much for having me. Appreciate the opening. Very positive. We had a good quarter. You're right. Q2 is usually a lean quarter for us. But we had a very tough summer. It was a cool summer, as you remember. So Q1 was slow. I think as we got into Q2, we were concerned because typically it takes 2 or 3 quarters to recover from a poor summer. But we are fortunate, I think. It turned hot in Q2, and immediately as it turned hot, we saw demand start to increase. So the industry actually grew about 30% in terms of room air conditioners in the quarter. And in Blue Star, we grew about 39%. So we did slightly better than the market. But there was really a recovery of the market that has fueled all of this. If you ask why that would be and, why is it not waited till Q4, I think it has to do with the fact that we're in an inflection point of growth as far as our industry is concerned. So, of course, while it will always be a summer or a heat-driven impulsive purchase, I think as soon as the heat came back, you saw consumers running back to buy air conditioners. So I think that's a very heartening outlook I think we have for the industry.
Sure. Also wanted to get a sense on the commodity prices. They've been easing at large. Has it had any impact on the kind of margin bump up that you've already seen? And do you think that the trend may continue going forward? On the flip side, on the depreciating rupee, which makes imports also costlier, what's been the impact of both been like,
Sure. So our margin improvement is, of course, primarily driven by our own in-house initiatives around cost takeout, backward integration, localization, etc. So there's, of course, an element there. But there's no doubt that it has also been benefited by relatively lower raw material and input costs. We've had a very stable input cost regime for the last 6 to 9 months, which has helped us clearly. Now, as we look forward, I think so our internal measures that we have taken are yet to fully unfold because we're obviously mid-cycle in our investment. So as we go forward, we will continue to see more and more benefit on the profitability from our internal actions. But as far as raw materials and input cost is concerned, we are a little bit cautious right now because of the recent happenings in the Middle East. We are unclear how far that will impact the supply chain and what it'll do to crude and others. So little cautious on that front. I think it's a little too early to take a decision or call on that. I think another 4 to 6 weeks, we'll have more clarity. But I want to reassure you that because we have large number of internal programs running, even if there is an increase in raw materials, the impact on Blue Star should be less than the rest of the market.
Okay. So in the current quarter that we are in currently, of course, it's a elongated festive season this time around. Has that given you an edge vis-a-vis the last year? And how has the demand really panned out during the festive season sales period on, e-commerce, both offline, online, the kind of sales that have panned out over the last few weeks?
Sure. So October has been a good month. It is we've seen the festival season very strong. Again, for the industry, I'm talking, and for Blue Star as well. So we have a good October. I think Diwali will continue that those festive sales, and then we'll go into December where we will start to load up for the upcoming summer. So we're quite confident that it should be a good quarter for the industry as we go forward.
Okay. Let me also ask you on segmentation basis as well, corporate, commercial refrigeration business that's seen significant volume growth across major product categories for you. How do you see these segments contributing going forward? And as far as the residential segment is also concerned, how do you see the revenue mix really panning out going forward?
Yeah, so our B2B businesses have done well. Segment one grew about 12%, stable margins. We've had good order inflow. As far as execution is concerned, a little less than what we had wanted, but I don't think it's anything to be concerned about. We're focusing on execution because as we get towards the end of the year, we'll be moving into the national elections, and we're conscious that there will be a slowdown at that time as far as execution is concerned. So next 3 or 4 months, we're very focused on B2B execution. Inquiry levels continue to be good. Order inflow continues to be strong. So therefore, that's a good outlook for that business. And across all segments, we've only had, as far as the commercial real estate segment is concerned, there's a little bit of dampening there. But I don't know if it's more to do with the market or it's Blue Star because we've been defocusing from the commercial real estate market for some quarters now, trying to build up an order book in some new verticals. So that has actually panned out for us. So we've had order inflow growth in spite of defocusing from commercial real estate. Um, you asked about commercial refrigeration, which is our other B2B business that's in segment two. We had a good quarter, great half. Outlook is very positive for deep freezers, water coolers, bottled water dispensers, supermarket refrigeration, medical refrigeration, etc. So I think the whole B2B to C is what we call that business, right? It's business to consumer. Consumer demand for food and consumption continues to be good. So we're seeing reasonably good demand there as well. So I think overall things are stable, things are good, and outlook is positive.
Okay. Also wanted to get a sense of how is the data security business doing for you and what exactly are your plans going forward for this particular vertical as well?
So it's called the Professional Electronics and Industrial Systems vertical. That's our segment three. Profitability is held up. You've seen a little bit of degrowth in revenue. I think that, again, fundamentally, order inflow is good. We've had some challenges in execution, more to do with internal capability and just building up because, and that's a story for Blue Star overall, not just in segment three, is that as we see this sustained growth rate across all our lines of business, we are starting to focus a lot more on capability building and strengthening execution so that we can keep up with this pace of demand. So segment three, we faced a little bit of headwinds in execution, but again, positive thing is that order inflow has been good. And so we are fairly hopeful that we'll recover by Q4 in segment three as well. Demand is intact.
Okay, so just to get a larger sense to all our viewers also, sir, say 4 or 5 years down the line, if you could help us understand your key focus areas, the key verticals in the pecking order that you believe that your focus will largely be at and where the maximum amount of revenue and margin contributions will come from.
Yeah, so we are a little fortunate right now. We have multiple cylinders firing, very frankly. We have our B2C, our residential business that's doing well. We have our B2B businesses that are doing very well. Even our projects business, which was under pressure for several years, has recovered very strongly, and order inflow is good and profitability has returned. So really, I don't think we can really talk about pecking order per se. I think our objectives are quite clear. We have a products business and air conditioning. So we are, first of all, a vertically focused air conditioning and refrigeration company. What that means is that we will operate in the residential, commercial, and industrial markets. We will operate in commercial refrigeration. which is an important business for us. We will take these businesses global, so outside India. So the international growth is a focus for us, but it'll all be vertical of AC&R. Other than the product, and in the products business, the focus is investment in manufacturing, investment in R&D, building IP capability and distribution. So that's as far as that business is concerned. We have solutions businesses, which is our projects business, our service business, and our professional electronics and industrial systems business. So in the solutions business, our focus is very much on capability building and scaling those operations while keeping return on capital as a primary driver of capital allocation. So I think we're looking at a Blue Star that should grow healthily over the next 4 to 5 years. We intend to be market leaders in all our B2B businesses, and we intend to be the most profitable business when it comes to residential. I think that's how we look at the outlook.
Sure. Sir, could you also give us a little bit more detail on the 1,000 crore rupees equity infusion via QIP that you completed recently? How do you intend to utilize these funds now?
Sure. So, we have invested about 600 crores in capital capex over the last 2 years. We have a capex plan of another 1,000 crores over the coming 3 years. So, when we looked at this 5 year capex cycle of 1,500 crores plus, we were concerned that our balance sheet isn't sort of equipped to handle that kind of investment. So there was a choice between either deferring investments or going ahead with the investments but strengthening the balance sheet. So we took a call to raise equity. I think the timing was good, the valuation was good, and we've got some marquee new investors into the cap table as well. So with this money, we are just executing the plan we currently have, which is investment in product development, investment in R&D infrastructure, and investment in adding capacity so that we can serve both our B2B and B2C businesses. So that's where the money will be deployed. It'll take us, maybe another 18 months to fully deploy it. And then I think over a reasonable 3 to 5 year period, we'll see very healthy returns on all these investments that we're making.
Okay. Just to give a clarity to all our viewers, what is the current order book at, and how does the pipeline really look like for the entire fiscal and for maybe a year again?
Sure. So we've the order book as of today, I think, stands at about 6,000 crores. And that's obviously largely segment one. Order inflow, like I said, it continues to be good. We may see maybe 3 or 4 months of slowdown in both order inflow as well as execution pre-election and just after the election. So we're conscious about that. And so are looking to maximize both our order inflow as well as our execution by January, and then we'll have a bit of a lull before things pick up post-May. So, like I said, I think we have order inflow from multiple segments, so it's a well-balanced order book we have. We have projects ranging from 1 year in execution up to 3 years in execution. You know that we focus only on the Indian market. We're not focused on international projects at all. So this is all domestic demand that we're fulfilling. And it's a healthy mix of government projects. And of course, in the private sector, it is a lot of factories, data centers, and the like. So I think we're happy with the current state of the order book and execution of the same.
Right. Sir, since you talked about the general elections, I wanted to understand a little bit more on your recent foray into the railway electrification and the water project space this year. What have been the orders that you've bagged so far in these particular verticals, and what's the outlook?
Yeah, so we booked a few projects. Our strategy when we enter a new segment is we're typically cautious. So we cautiously enter these new segments. We've decided to take 1 or 2 projects in each of these verticals and with, a customer and not overexpose ourselves. So it's from a portfolio point of view that we look at our order book. So we have booked a few projects. I think it's 3 projects totally in railway electrification. I think in water, we've got about 2 or 3 projects that we booked. We're sort of mid-cycle in execution, a little early to give real feedback on overall profitability, but cash flow is in good shape. And we're somewhere between 30% and 60% through with execution. So things are looking good and as expected. So we will make sure that we execute these projects, see it, because, the projects business, until you close the project, you don't really know where you stand. So we'll make sure that we close these, and then we will go back into the market and book some more. I think we've already proven this now multiple times in factories, in data centers, and some new verticals we had entered 3-4 years ago. So it is just an extension of the same. I think this year we just booked a water project in this quarter, which is why you see order inflow up.
Okay, wonderful. Well, great speaking to you, sir, and thank you so much for taking the time out and discussing all these insights from the Q2 earnings. All the very best to you for the future quarters as well, and here's hoping for an interaction soon to understand more about the business outlook as well as the industry outlook as well. Congratulations to you on yet another strong quarter that you have reported. Markets are down, but the stock has reacted positively, and that's what is the beauty of the stock markets as well. They continue to reward the companies that do well fundamentally and continue to report positive earnings for the benefit of all the shareholders as well. With that, we'll quickly wrap up this edition, but do stay tuned on to Business Today Television to catch all the updates from the world of business and stock markets.
Well, at the India Mobile Congress, really interesting propositions when it comes to new products, and of course the technology of future is, of course, and one of the brands which I've been speaking to now is, of course, HFCL, the leading company when it comes to providing optical fiber and, of course, new network areas. Mr. Nada joins us. Thank you, Mr. Nada, for joining us, sir. What did Mr. Akash Ambani unveil at your setup?
We introduced our fixed wireless access customer premises equipment, what Jio calls air fiber. We introduced that to the world today. It was unveiled by Mr. Akash Ambani. We have fixed wireless access CPEs, which is giving fiber-like connectivity on 5G spectrum. So customer gets a fiber-like connectivity